On this video, Monday 2nd of September 2013, it is Labor Day in the US, so if you're taking the day off, hope you're having a restful time. Here in Sydney, Australia, having absolutely beautiful weather. This is the warmest winter on record down here, and we also had some swell pulse through, which was really nice to get out and about. Anyway, let's talk about the bounce in the market, and I want to respond to a question on multiple time frames from Hamid. So I'll get to that in a second, but just show you quickly the 40,500 tip bar chart. I was hoping that this was going to develop into a full-blown trend on the downside, but looks like 1630 is holding. Remember, we broke through 1680, which was key kind of level, into a trend move on the way down, and then we also busted through 1640 last week, and I was hoping that this exhaustion pattern would kind of take us through, and into another trend move below here on this time frame. But Thursday, Friday's activity, you can see we put in bullish divergence now, cyclical support is held, put in a flush pattern, and the news kind of over the weekend re Syria has kind of been viewed as bullish, and so we bounced back up. So a little disappointed that we haven't kind of made it through into a full-blown move, but keep on telling myself, telling everybody, you got to trade what the charts tell you rather than what you want to happen. So got to be adult about this and kind of just view this 1630 as absolutely key. Anyway, let's respond to Hamid's question, because it's a good one. We can talk about these kind of higher time frame charts and what we're seeing. So here's the question. Hello Barry, hope you're doing well in trading and otherwise. I noticed in big moves come when cycles sync up, which is a video I did on the 23rd of August. You've used daily, 135 minute and 45 minute charts. Is there any importance of these time frames to notice sync up? And is there any article or book available? Let me know please. Best wishes, regards, Hamid. So in short, there's three answers to the question. First of all, in terms of articles and books to go see, I was introduced to the idea of multiple time frames by it's a classic book by Alexander Elder called Trading for a Living. It's quite old now, a little bit dated, but it's still good. And this chapter is kind of buried at the end of the book, and I think it's the best kind of chapter in the whole book, called the Triple Screen Trading System. And in that one, Elder talks about using 3 time frames in order to trade with. And I think, because he was kind of swing trading futures, it was a daily, weekly, and a monthly chart. But the whole idea between the multiple time frames, you use the highest time frame to look for overall market trend, to make sure you're trading in the direction of trend. The medium time frame, the middle time frame, you use for your signals, and then the lowest time frame, the finest kind of tuned time frame, you use to fine tune your entry point. So it's a classic kind of idea. I really like it. He was using, I think, daily, weekly, monthly, which gives you ratios of 5 days per week and 4 weeks per year, so a ratio of 4 to 5 between time frames. Personally, I use a ratio of 3 between time frames, because I find that works a little bit kind of faster. So I'm using that on my 500, 1500, 4500 tip bar charts and all the other higher time frames. And you can, it kind of looks a little odd, because on these time frames I'm looking at daily, what we're referring to in this response to Hamid's question, daily 135 minute and 45 minute charts. And I don't think anybody out there is looking at 135 minutes. It's kind of a really odd time frame. Everybody's using 5, 15 minute, 60 minute and so on. Why would you use 135 minute? Well, here's the reason. So if you put a bar counter on a daily charts, this is 1 minute chart of the day session, says at es.d for the day session only, you can see the bar counter goes up to 405. So there's 405 minutes in a day session. So divide 405 by 3 and you get 135. Divide 135 by 3 and you get 45. So there's exactly 3 135 minute bars in a day, and there are 9 45 minute bars in a day. So that's why you get 135 minute and 45 minute charts. A little bit odd. So but the point is, because markets are fractal, you'll see these patterns, trends and cycles in different time frames, in all different time frames. I see them on my day trading charts, the 500, 1500, 4500 tip bar charts. The higher time frame tip bar charts, where you're looking at kind of bigger picture stuff, 45 minute, 13,500 and 40,500. This 15 minute, 45 minute daily, and daily, weekly, monthly, all of those. Markets are fractals. You pick a market, you pick a time frame, and you put on 3 kind of multiple time frames like that, put on better sine wave, and you will see trend moves and cycle moves kind of syncing up like this. The point I'd like to make, though, is that you need to wait for everything to complete in the lowest time frames, to things to finish, the trend moves to finish in the lowest time frames in order to take reversal trades. So let's look at this in terms of what's happened on the 45 and the 135-minute charts lately. So 23rd of August, I was talking about pullback to end of trend on this lowest time frame, syncing up with a cycle move here on the daily chart. So it's coming into a cycle down here. So a trend move syncing up with a cycle move on the highest time frame. And what you see is trend moves rippling through kind of the lower time frames to the higher time frames. And what that shows you on this first move here, after breaking into this downtrend below 1680, is a trend move that ends in a left shoulder. And then what you're waiting for next is the next trend move on the next highest time frame to develop and complete pullback to end of trend. So if the 45-minute chart is showing you that level, pullback to end of trend with a left shoulder, the 135-minute chart, the trend moves are kind of percolating through the different time frames. We've had pullback to end of trend go off on the 135-minute chart. That marks the head of this move, which is now syncing up with a cyclical support on the daily chart. So all of this is very important, kind of down here at 1630, 1640. So now, what I'm expecting on kind of Tuesday's activity, when the market kind of by the end of Tuesday, because we've had a little bit of a bounce in the lower time frames, this potentially is going to be a cyclical, a bullish divergence pattern kind of going off. Pullback to end of trend, we've had blue professional bars kind of come in here with exhaustion patterns. We need this to hold and a bullish divergence pattern to come in on the 135-minute chart here to show that this has really been, an important cyclical or an important kind of support level around 1630 to 1640, kind of down here, that we'll have a bounce from there. I still think we're weak. If you look at the daily chart, it's Rambo patterns up here, very weak buying going on. We've kind of skirted with the lows, with the support. We've broken through support here. That shows that the market is weak on this daily time frame. So I'm expecting just a weak push back up. Could go to resistance on the daily chart, but then potentially roll over. So I'm still not over my kind of bearish stance. It's just at the moment the macro news is giving us a little bit of a bounce. Right here, and we could see a continuation with Tuesday's activity. But let's see where this kind of goes. At the moment, 1630, 1640 is kind of holding, so we've got to go with what the markets, the charts are showing us. I'd love it to kind of break into a continuation of the downtrend, but for the time being, it's not kind of happening. So there we go. Hopefully that was helpful to you, Hamid. Kind of response on those multiple time frames. Look for Alexander Elder's book. You'll see this in all different time frames because the markets are fractal. But you need to wait for everything to kind of complete, those end of trends to percolate through, to ripple through the different time frames before taking reversal trades. Anyway, I hope your trading is going well and looking forward to this week's trade.